We'll see exactly if that happens or not. And that India t-shirt, that seems to be now playing out in the kind of match we are seeing between India and New Zealand in Mumbai at the 1K Day Stadium. And we'll talk about that in a moment. But right now, we're talking about the traction in the markets and whether this is a good time to invest or not. The bulls taking charge. Is it a time when we can add to one's portfolio, or should we wait for all the haze to clear out, because there are several moving pieces globally as well? Let's ask market veteran Sunil Subramaniam, the Managing Director and CEO of Sundaram Mutual, is joining us. Great to have you with us. I hope you've been enjoying your Diwali celebration. Sunil, our warmest greetings. All of us from ET now joining me, and thanks for making the time on Bhai Dooj. But tell us about this Diwali party that the markets seem to be in. How long do you think this party is going to last? Will it last long enough to hit 20,000 by the end of the month, like some market voices have been saying?
Well, thanks. I'm Vikram, and happy Diwali to all of you. So, well, yes, it's been a Diwali party in the markets, but asking us to take a short-term call with a month end, will it cross 20,000? That's a tough one to say. But what I'd like to say is that you also asked a question around on whether it's time to stop buying, as I believe not. I believe that what's happening in the market is that the market is responded in the last 2 months. If you see, September and October were months that the FIs pulled out money. And that was on the back of the Israel-Hamas war, and also fear that oil prices were going to rise in the coming winter, with OPEC announcing production cuts and the lot. But what's been surprised for the markets is that the oil price actually have dropped since then. And you actually seen Venezuelan supply come in, the US also pumping up and buying some more oil. So the oil easing is the best news for Indian markets, because short-term hedge funds, which take a call on oil as a key trigger for India, have reversed their positions. And some of them who went short in the market have done short covering, and also others who were hesitant to buy are beginning to buy. So I think one of the biggest positives from an FII perspective has been this changed outlook towards crude oil, and the fact that the Israel-Hamas conflict hasn't impacted the oil prices. The second aspect here is that the consistent flow of domestic investors through SIP book. It's almost at 17,000 crores. It's almost going up 500, 600 crores every month. So over the next few months, and what I've looked at and found out is that about 30% of the flows are in small and mid-cap funds, and another 13 multi-cap funds. So if you notice through this period, the mid and small cap indices actually have been rising faster than the large cap indices, because the large cap are largely dependent on FIIs taking a call or not taking a call. But consistent domestic buying, because the SIP book is giving mutual fund managers the money, means that the broader market has got a lot of support. So I would say that even today, of course, individual stocks, it's hard to predict which will go up in the short run. But if you trust your money to a mutual fund manager who not only brings his expertise in terms of stock picking, but also the diversification across not only large, mid, and small, but across the sectors, I will find that this is as good a time to invest as any. And finally, because the markets are reaching new highs, it does not mean that markets are overpriced in. I'll tell you why. Because the earnings season has turned out well. So if you have a 15% earnings growth, it means that the levels of the Nifty and the Sensex have to go up 15%. There's nothing, strange. It's not rocket science. So I think as long as the Indian earnings growth looks good, and so far the earnings season has looked fairly good, and we are running into a festival season where the numbers are looking good. So next quarter, that is from January 10th, when you have the earnings results come through, I'm sure that the consumption story will play out well, right? That being said, it's not like every day the market is going to rise, because you do have events. You mentioned a couple of events in terms of overseas, but domestically, 3rd of December, you have the state election results coming out. And depending on how they play out, there could be short-term volatility. So I would say that for a long-term investor, the any volatility in the short term is a good time to buy, but keep your focus on domestics, right? Because domestics is the story of the Indian economy and will be the story of the Indian market, both domestic flows as well as domestic economic growth. So you keep your focus on domestics and you spread your risks across a diversified portfolio. I see that today is as good a time for a long-term investor to buy as yesterday or tomorrow.
Sunil, you did mention geopolitics and, of course, how it's played out in crude oil prices, but also the American inflation print. Now, that has been stimulating this move of investors. favoring perhaps riskier assets. So how do you think one needs to align one's portfolio to get geared towards that trend, if you please? Should one dig deeper into the broader markets or wait a tad to see some more positive build-up in momentum in the large cap counters?
I think in the large cap counters, there are two things here, Vikram. First is that flows which come from abroad are, by and large, I would say 60% of the flows are into passives. Abroad, passives are a big market. So when passives flow come in, they buy all the index stocks, right? And active fund managers are the one who go overweight or underweight. Since the passives have been dominating the flow, right? If you are going to buy large cap, they are essentially a defensive, a safety aspect of a portfolio. Then I wouldn't go cherry picking into sectors there, because the inflow, if the inflation printout comes very soft and Fed indicates that they are going to pause and then cut rates, then you will see a sudden spike in flows towards the riskier markets like emerging markets, and a lot of that will come through passives. So it will buy the market across the range. So in large caps, I would say you best buy the broader market. Do not go and cherry pick your sectors and your stocks, because there will be buying support across the board due to liquidity. It's only in the mid and small caps where the choosiness comes in, because there are some stocks and sectors which benefit more from domestic growth than others. But in the large cap, I would say by and large, it's a safety oriented play. It's a less volatile play. And so you keep your exposure across the spectrum there.
Of experts, Sunil, like Chris Wood, we've been speaking to, also Chokani, they are speaking about Zomato and the opportunity it holds. But apart from that, this rally that we are seeing in the IT, in auto stocks, are those the ones that you think will also fuel further rallies in days to come? Or you see other sectors taking the lead to push up the indices further? Where do you see the maximum upsides coming through?
I see the maximum upsides coming from consumer discretionary and consumers, because this is election season. After the three, four, five state elections, you have the general elections, and generally political parties, whether opposition or the government in power, spend a lot more into the economy. So I see consumption getting a huge boost in the run-up, and those numbers on the EPS will look better. So I think that consumer, especially consumer discretionary, will take the lead. And I feel that greater allocation towards consumer durables, towards housing, and towards auto, because even in auto, it's very polarized. See, 7 lakh plus premiumization. Premium cars have been selling, but at the bottom of the pyramid, entry-level cars and two-wheelers, they will run up in the next set, because that's where you will see broad-based buying. So I would say consumption, and that's the broader consumption story, which is, I would say, a reallocation. And one of the reasons for that, Vikram, also is that the market has diverted a lot of capital into capital goods and infrastructure because of the good story that's building up, but it's neglected consumption. So to the relative valuations between capital goods, industrials, and the infra space versus consumer, I feel there's scope for consumption to move up over the next 6 to 12 months.
Watching all the spaces that you're pointing towards, Sunil Subramaniam, always a pleasure getting in your perspective on the markets and the direction that they're likely to take with the kind of rally we are seeing right now. But thanks very much for joining us this evening.